You're listening to the Weekly Wrap-Up on Sprott Money News.
Well, greetings once again from Sprott Money News and SprottMoney.com. It's Friday, July the 12th, 2019, and this is your Weekly Wrap-Up. As usual, I'm your host, Craig Hemke, and as usual, joining me is Eric Sprott himself. Eric, good morning.
Craig, good morning. I'm sort of sitting here with a little byline, and I think the byline I'm going to have for this week is we're blessed with stupidity.
Ooh, I like that. Okay.
Ooh, where do you think that'll take us?
Yeah, I like it. Well, let's get right into it. Before we start, of course, we got to remind everybody that as long as prices stay down, particularly in silver, that means you should be adding some, even if that means you're dollar cost averaging to your average price. SprottMoney.com is the place you want to do that, and the Sprott Super Summer Sale continues through the month of July. Go to SprottMoney.com, check out the website, go to the Deals tab, and you will find all kinds of deals there and also all the information on the Super Summer Sale. Again, SprottMoney.com or 888-861-0775. Eric, lay it on me. I like the theme of this call. What do you have for us?
Well, I mean, I'm more referring to the central bankers, and when I listen to what Mr. Draghi had to say, the minutes of their last meeting came out. I mean, I'm stunned in a way that, here we put up with central banks saying, well, we're going to print money, we're going to go to zero interest rates, and it will be the antidote to everything. We'll have wonderful economies. And here we are. We don't have a wonderful economy. I'm thinking of Europe in particular here. We don't have a wonderful economy. We got negative interest rates, and what does Mr. Draghi say? Well, we're going to cut rates, and we're going to print more money. Well, it didn't work the last time. Well, why do you think that it's going to work this time? Isn't that sort of the definition of stupidity? Insanity almost, repeating the same thing and thinking it's going to work. And, of course, it looks like we have the same kind of thesis working at the Fed, where it seems more and more obvious that we're really trying to support the banking system and the stock market, I believe, okay? And therefore, everything we do ends up being stupid for the economy. And it's going to lead to a great fall one day when, you can. I don't even know what happens when interest rates go deeper in Europe. I mean, they're already, minus 0.4 for a German bond. And
yeah,
how long do people sit there and own credit assets with a negative return? They're going to think about buying something tangible, whether it's gold or wine or something that would hold its value rather than lose money. So we're kind of blessed by the stupidity. And we have this looming thing that might be happening where, from the U.S. perspective, they think they're in a currency war, which President Trump is suggesting, we should maybe even get involved in the markets to take the dollar down a little. I noticed that Judy Shelton, the new nominee for the Fed, who's a gold supporter, but one of her thoughts was, she was asked whether she would favor cutting rates. She said, yes, we have to cut rates because everyone else is cutting rates, and we don't want our currency to be too strong. So this is kind of getting a little pervasive here, that everyone's trying to get their currency weak. And, of course, with all weak currencies, that stupidity will lead to higher gold prices. So I think we're in pretty good shape from the people running the money machines perspective.
Yeah, and prices held in there so well after being contained below $13.50 for 6 years. We broke out almost a month ago and have spent the better part of the last month above $1,400 without a really serious pullback. Do you find that interesting as well, Eric?
Well, I do. And the pullbacks, I mean, there's some, like I couldn't believe the pullback yesterday when they said, well, inflation was up 0.1, which is higher than the 0.0 they expected, and so they hammered gold. I mean, I've just never seen anything so preposterous in my life, okay? You're telling me that 1.2% inflation is suggesting that the Fed won't cut? Come on. And, of course, it's the commercials trying to ramp it down.
Right.
And normally what we're finding is they ramp it down, take it down $10, and then slowly but surely it kind of winds its way back up there. And, of course, with every comment by a central banker, they all seem to be pro-gold. So and even when you get the politicians involved, President Trump, that's pro-gold. So we had a lot of things that should work, and I think when you think about the tsunami that's happening in negative interest rates, it's going to lead to a very high gold price. I think this is just the start here. You know, we can have targets much, much higher than here, and the opportunities that are going to present themselves, that are presenting themselves amongst the mining shares and owning the metal products, are quite stunning. So you don't want to be missing it.
Just a couple of other fundamental factors, because so much of the focus is on the Fed and the ECB and on all of that jazz. But Eric, how about the news out of Poland this week about all of the gold they're buying, the funds that are flowing into gold ETFs? And then yesterday we just got numbers about the U.S. budget deficit on pace to go well over $1 trillion in this fiscal year that'll wrap up at the end of September. Just any thoughts on other factors that you're seeing?
Sure. Well, I mean, I think the Polish thing was incredible. I mean, out of nowhere, they say, oh, yeah, by the way, we bought 100 tons in the first half of this year. Well, 100 tons is not a little bit of gold.
Yeah.
That's probably more than the Russians bought in the first half of the year at 15 tons a month, which is 90 tons in 6 months. And the Polish people bought 100 tons. And they announced they also had purchased some late in 18 that they hadn't reported yet. And the fact that these new central banks keep coming into the gold market, the India last year, Poland, Hungary, Kyrgyzstan, Kazakhstan, Russia, China. You know what? There's a message there.
Yeah.
There's a message there that they prefer hard currencies to fiat currencies. Mm-hmm. And once we, the public, get on board here, and the institutions and so on, and even the institutions I think we bought 127 tons in the ETFs in the month of June. There's only about 200 tons mined in the free world per month. So you can't sustain 127 tons in ETFs and think you're not going to have a shortage, and that the price is going to stay here. And the only reason the price could possibly stay here is because the shorts, the commercial shorts, just keep increasing their short position, which is what they've done. And it's a question now whether they're going to be overrun by the physical buying. And every time you hear, any comment from some monetary authority, it just leads you to the same conclusion. You got to own precious metals.
Yeah. Well, as we always say on my site, if these countries are taking their dollar reserves and buying physical metal with it, especially gold, shouldn't every individual person with dollar reserves or any fiat currency reserves be doing the same? Right.
And imagine if Poland, instead of buying gold, had bought silver.
Oh, my gosh.
That would have turned the silver market right on its ear, that one purchase, okay? One buy order, over. One buy order, and it's over.
Isn't it funny to think, too, they bought 100 metric tons in London, so that just means they shuffled some money or some gold pallets back and forth across the blue line in the vault. But now Poland says they want that gold. That ought to be an adventure too.
Yeah, I think I'd like to actually see the gold this time.
Yeah.
So that's another element that's happened in the last few years. In fact, when I think about central banks, I think they used to sell something like 600 tons a year. About 7 or 8 years ago. Now they're buying 600 tons. Think about the dynamics of that. A 1,200 ton a year change in a 4,000 ton a year market. 1,200.
Yeah.
They're buying 30% of all the gold, 30% more than they were 10 years ago. How can the gold price not go up?
Yeah.
Wow.
All part of the alchemic magic, let's call it that, of the bankers. Eric, I do want to, before we get to some of the miners this week, I do want to get your opinion where a lot of folks are noticing Bitcoin has been rallying. Not so much maybe what they call the altcoins, the smaller ones, but Bitcoin's been going up and then getting smashed back and then going up again. There's been a big campaign out there about, they call it drop gold. I guess urging millennials maybe to go in the direction of Bitcoin rather than gold as they go through life. It's an interesting idea, I guess, but I would sure think there's room for both. What are your thoughts on Bitcoin versus gold?
Well, it's tough enough on millennials already, right? But to give them that kind of advice, that's just adding insult to injury. Okay, and I hope they don't follow it. By the way, I mean, my view on Bitcoin is that it's not a real thing. God forbid you lose your code and you can't get the stuff, and there's no way of getting access to it. But I just don't believe in it. I don't believe that something up in the cloud or digital or whatever has value. I don't know how well it's being accepted in stores, or whether I've heard it takes a long time to even do a transaction, for goodness sake. So luckily I'm not a millennial, and so I don't have to follow that advice, and I never will. And I would certainly urge others not to. I think the story of gold could be very, very dynamic here for the next 5 years, and will make an oppression every bit as equal to the rise in Bitcoin. But you know what? When you finally say you want to get out, you can touch it and own it and feel it, and you're in control of the whole thing. So I'm not. I don't think anybody should be dropping gold here. In fact, totally the opposite.
Yeah. All right. Lastly, Eric, let's talk about a couple of stocks that we often discuss on these weekly wrap-up programs, the earnings release and some news out of Kirkland Lake this week. And I know you want to touch on Wallbridge as well. Yeah.
Well, first of all, I said at least a couple of times recently I'm looking for silver plays, okay, and I am. And I don't have anything to report yet, but, I'm hot on the trail here, and I think silver will just explode one day. Poland comes in and puts their $30 billion into silver. Excuse me, that's 2 billion ounces. That's over. And anybody could do it. Maybe the Bank of Mexico, that's the big silver producer, would step in and buy something like that, which is not even a lot of money, by the way. So I think silver is going to explode here. We have a very strange setup in the commitment of traders that they're short like 1 billion 1 ounces or so. So I'm looking for something. I don't have any to report on that. In terms of Kirkland reported their quarter, it was probably a little disappointing for sure that the production out of the Macassa mine went from, I think it was 77,000 ounces last quarter to 49,000 ounces this quarter. It was suggested that they had some water issues in the mine because of the significant rains that happened up there, and that it affected one of their loading pockets. They have suggested that the production should be normal moving into the third and fourth quarter. And, of course, Fosterville did incredibly well, and we could be moving into some serious production improvements in Fosterville in the third and fourth quarter, which is what the company stated all along. And it's just a matter of moving into, you go from 20 gram to 40 gram ore, you double your production, or go from 40 to 60, it goes up by 50%. So we know the gold's there. We know the grade of the gold. It's just a matter of getting into it, and they've suggested that they'll be getting to it these 2 quarters. So that should be quite exciting. In the case of Wallbridge, they brought out another exploration result. I always find their exploration releases, they take a lot of work because there's a lot of pictures to go through, and I'm trying to understand what's really happening there. And of course it's great. It's complicated because it keeps getting bigger and more complicated. And by more complicated, I mean, for example, they used to have the strike of these zones was sort of northwest, southeast. Now we got zones that are almost going west to east, a whole set of new zones that they're saying control the high grade. And I'm looking at some of the potential intersections that they have on these zones that strike in the new direction, and there's a lot of visible gold showing on the figures that they have there, and these are all holes that haven't been reported. And as you look at these holes that haven't been reported, and you're looking at where they're showing they have the visible gold, there could be some stunning news releases. One of those holes, they said, had 940 meters, almost totally endowed with gold mineralization. They didn't say the grade. We don't know the grade, but that is like incredibly long. And we have those holes to wait for. I would encourage people to look at the news release, look at the diagram of the coverage of the holes and the areas that it goes over. I mean, we could be talking about a very, very large resource here. So I'm still very keen on it. I'm very much looking forward to these some of these holes coming out that where we know they have visible gold, but we don't have the results yet. So it all looks good on that front. They even said they had a new set. They got gold in sediment, which is brand new. They said that they found gold in the Gabbro down at 600 meters, which is new. Like, it just pretty well everything is kind of confirming major development here in this particular deposit.
That's exciting. That's very exciting. And Eric, I had somebody ask me this week, when a Canadian mining company sells its metal, do they sell it in dollars? Do they sell it in Canadian dollars? Can they pick? How does that work?
Yeah. Well, of course, they can choose. Probably most big companies would sell it in U.S. dollars because they report in U.S. dollars. So, for example, Kirkland Lake reports in U.S. dollars. So, unless you needed some for Canadian pay and stuff like that, you'd probably take U.S. dollars because you don't want to have to trade your dollars back and forth all the time because of the cost of trading. But so most of the big companies would take it in U.S. I would say a smaller company that didn't have U.S. obligations, who was reporting in Canadian dollars, would probably just keep it in Canadian dollars. But it's entirely up to them. But most of the big guys report in U.S. now, so they would sell it in U.S. dollars.
That makes a lot of sense. Hey, before we go, I just want to remind everybody that a monthly feature we have at Sprott Money is our Ask the Expert series. This month's segment will be recorded next week, and it'll be with former Fed official Danielle DiMartino Booth. Thanks to everybody at Sprott, all the Sprott Money customers, everybody online that has already sent in questions this month, but there's still time to do it. You can just tweet questions at us. You can email us questions if you have it. For Danielle DiMartino Booth, we're going to record that next week, and we'll try to answer as many of your questions as possible. Eric, hopefully we can answer some questions over the next couple of weeks as well. It's going to be an interesting run-up to this next Fed meeting, and it's going to be a very interesting remainder of the month and remainder of the year.
Should be fun. I should probably warn all our listeners that I may go and buy all the Sprott Money silver before they get a chance.
Yeah, exactly. Temporarily out of stock is what it'll say.
You got it. You can blame me.
All right, my friend. Thank you for your time this morning. I hope you have a great weekend.
Okay, you have a good one too, Craig.
And from all of us at Sprott Money News and SprottMoney.com, thanks for listening. Have a great weekend, and we'll talk to you next Friday.